Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod. 500,000 California workers are getting a pay bump. The state's fast food $20 minimum wage starts today, and one McDonald's franchisee says it won't be easy.
This is an extraordinary wage jump, 25% overnight.
And the capital city's sports dunk, D.C. Mayor Muriel Bowser on her play to keep the Wizards and the Capitals on their home courts.
What we had was a real deal. We had the ability for the teams to renovate and place here at an iconic location where they've been incredibly successful.
Plus, a stock-fueled wealth boom, a new number for the Fed, and Mets owner Stephen Cohen's bet on Fox. How strong are those assets?
Things like Tubby are working for them.
Is that how it's pronounced?
Tubby? I don't know.
It's Monday, April 1st, 2024. No fooling. Squawk Pod begins right now.
Stand Becky by in 3, 2, 1. Cue it, please.
Good morning, everybody. Welcome to Squawk Box right here on CNBC. We are live from the NASDAQ market site in Times Square. I'm Becky Quick, along with Joe Kernen and Andrew Ross Sorkin. Welcome back. We missed you.
Thank you. Did you miss me? You didn't miss me that much.
Yes.
I missed you a little bit.
Absolutely.
You didn't bring me anything. I mean, you didn't bring me anything in terms of some exotic disease or something.
Exotic disease?
From where you...
I could have brought you an exotic animal, but that would have been illegal.
Can we talk about where you were
transport.
now? Is it okay to talk about it now?
I went to Africa, and it was spectacular. It was everything. It was just one of the great trips of all time.
It wasn't your first rodeo.
No, we've been first time with our kids.
Yeah, first time.
But it's one of the great trips. If you can do it, I highly recommend it.
We haven't gotten all the details.
It's a remarkable thing to do.
Because I mean, the vistas must be unbelievable, but it's about the animals, is it not, or is it about everything?
It's about everything. By the way, I would like to live in Cape Town and just host Squawk Box from Cape Town if we could make that available.
Because it's on the ocean and
because it's possibly one of the most beautiful cities in the whole world.
Really?
It's a city with Table Mountain in the back and the ocean on the other side. It's just you can't get over it. It's the whole thing is crazy. It's unbelievable.
And now you're back here in Times Square.
And now I'm back here in Times Square. Yeah. Exactly.
A little different lighting.
Different type of animals.
It's about elephants and lions
and leopards. It just, you know what, being outside all day long with animals is an amazing thing, and hanging out with your family doing it is a remarkable thing.
Yeah, well, we are very happy you got the trip. We're very happy you're back.
Are you up to speed on the Final Four?
A little bit, but I'm more up to speed on the Federal Reserve and
which
whether
is what we're going to talk about in just
whether
a moment,
they're going to be in the Final Four or not.
Is this a segue?
I'm trying anything I can do.
Throwing it out here. We're both going to try and move this over because the Federal Reserve is going to be a big topic of the day. We'll talk more about it in just a minute.
First up on today's podcast, what did you miss? While the markets were closed Friday ahead of the Easter holiday, the government was not. The Bureau of Economic Analysis released the Personal Consumption Price Expenditures Index, or PCE. Core PCE, the metric excluding more volatile food and energy prices, was up 2.8% from last year, up 0.3% from last month. This is a key data point for the Federal Reserve, which has targeted a 2% inflation rate. Now, at this moment, economists largely expect the Fed to start cutting interest rates this year, maybe even in June. But every time we get a data point like this, that calculus shifts just a little bit. The next big number to watch this week, employment data. Now, let's get back to Joe, Becky, and Andrew.
A lot on the Squawk Planner this week. It is Jobs Week in America. We're going to get ADP private payrolls. That's going to come up on Wednesday. We get weekly jobless claims and international trade data. That happens Thursday. Then we get the March employment report on Friday. And polled forecasters expecting to see the fourth straight month of at least 200,000 job gains. The unemployment rate expected to tick down to 3.8%.
Disney's proxy battle with Trian comes to a head this week. Shareholders will vote this Wednesday on the makeup of Disney's board. Over the weekend, Reuters reported that Peltz had won the backing of U.S. pension fund CalPERS. Of course, that invests on behalf of California's public employees. As of the end of December, CalPERS owned 6.6 million shares of Disney.
Meantime, billionaire Mets owner Steve Cohen has revealed in a filing last week that his firm, Point72, now owns about 5% of Fox's shares. The company disclosed the holding in a 13G filing, suggesting it is a passive investment. Stake was mostly built since the company's last public filing in February.
I guess it's cheap. I mean, that stock has been so dead for so long. I'm trying to figure it out. What do you think, Cohen?
I think there's some. It's cheap. I think things like Tubby are working for them. I don't know if you played on that channel before. I mean, that's their sort of.
That how it's pronounced?
Tubby. What? I don't know.
I think it's Tubi, like a tube. Tubby, like me. No, I think it's probably Tubi. I didn't know what you were talking about for a second. I thought it was like a kid's cartoon.
No, I think that it's a value play. And look, Fox still owns all that real estate, that big online real estate company in Australia. There's questions about how can you ever get the value out of that? If we go back a long way
in
favor of Fox.
Went down on the obviously the Dominion deal, right, when that happened.
But so much of the value of this company now is in online real estate in Australia. I mean, that's sort of the thing. We talk about Fox as it's a media company, but there's a whole other element.
Is it a media company? Is that what they do? California, Fox News?
Fox News. I mean, it's Fox News and sports, and that's what it is.
Yeah. Fox News is kind of lonely lately, I think. California's $20 minimum wage for fast food workers kicks in today. That seems like a lot. 500,000 people are estimated to work in fast food in the state. Many of them will see a raise of about 25%. The law applies to fast food chains with at least 60 locations nationwide. Exemptions, though, for some bakeries and for smaller-sized restaurants located inside grocery stores of airports. I saw was there a carve-out for Panera or something, too? I can't remember.
I guess if you can call it a bakery.
I guess, but it had something to do with Gavin Newsom. So I don't remember what the scuttlebutt was. Chipotle, Starbucks, and Jack in the Box have all warned of price hikes for customers. One Pizza Hut franchisee reportedly laid off more than 1,000 delivery drivers. That must be a heck of a franchisee. Instead, switching delivery out to apps like Uber, Uber Eats, and DoorDash that pass the cost on to shoppers in the form of fees.
Where Uber and Lyft treat them as contractors,
right,
not employees, so they wouldn't make the same sort of gains.
I mean, it's an interesting experiment, and we should be able to see exactly what happens if you're pricing them right out of the market. I mean, if it's way above market prices, it's not going to.
Well, it's bad on a lot of fronts. I mean, if you think about the unintended consequences, yes, we want people to have a livable wage, but if you think about the unintended consequences of something like I've watched this play out in schools and in charitable foundations with people who work with the most vulnerable people out there, whether they be aides or therapists, they would make more money if they quit their jobs, taking on some of the most difficult tasks, working with some of the most vulnerable people to go work fast food than they would being where they are. And that's not an argument for keeping these wages low for those workers. It's an argument for understanding value and realizing that we have to make sure that you're not going to be able to find these workers for these very vulnerable issues. You're going to have to start staffing up.
There are starter positions that aren't going to be, a living wage. There are starter positions; those might disappear.
Charlie Munger used to talk about how McDonald's is the best thing that ever happened for our younger younger people because it trained them how to show up every day for a job.
I just got nervous. Clint Eastwood was trending. He's fine. First quarter start for the markets, leading to a major uptick in household wealth. Robert Frank joins us now. I hope it's not increasing inequality.
It's not.
Okay,
it's not, and I will explain why. It's good
Nobody
news.
Needs that.
Good news all around, Joe. Record highs for stocks created record wealth for households. Household wealth reached an all-time high of $156 trillion at the end of 2023. That was mainly thanks to that end-of-year stock rally. Stocks added over $4 trillion in wealth for Americans in the fourth quarter. Most of the gains, like stocks, are going to the top. The wealthiest 10% of Americans own 87% of all stocks. The top 1% own about half. Yet since 2020, the stock market, combined with rising real estate values, have created the fastest wealth boom for just about everyone in recent history. The wealth of the middle 50 to 90%, so that's really the middle class, has increased by 45% over the past 3 years. They have added $14 trillion in wealth, about half of that coming from real estate values. Those at the top have done a little bit better, with the top 1% seeing their wealth increase by 49% since 2020. Most of their gains coming from stocks, with equities adding about $8 trillion in wealth. Now, economists say this wealth effect from stocks, where your investment gains increased consumer confidence in what is one reason this economy and spending continues to be so strong.
All right. I'm not going to look at you in any way looking for something that it's all good. I'm not going to try to find something.
The other good
there
thing,
are people that could. I guarantee you there are.
The other
people
good
that
thing
could.
about this is that we have a record number of Americans invested in the stock market. 58% of Americans now own stocks. 20% own individually direct held stocks. Both of those are at all-time records. So not only do we have record wealth from stocks, but a record number of Americans who are participated in the stock market.
Do you think that our debt problems and our deficit issues are so serious that maybe we can afford to not get quite as wealthy if we were to pay down some of this? In other words, should we go to 28% on the corporate tax rate? I don't know whether that necessarily means the market doesn't go up as much or whether it hurts profits or whether stock values go down. But let's say maybe it's not as good. Not as much of a tailwind is that a good trade-off?
The connection and the transmission mechanism, I would say, is that if we continue to have another strong year for stocks, we'll have rising capital gains revenue.
That's good.
Which will be good for
because we were missing that for
we were missing that
year,
really.
2022
certainly a bit last year, and if that could come back this year, we got more IPOs, we got more people selling stocks, so we're already seeing a large uptick in what will be larger capital gains revenue. And that's going to be the big decider, not just at the federal level, but also at the state level in California and New York.
I guess I can't help but think of the counter to that, which is what happens if the markets go down.
Absolutely.
Then you have a much bigger portion of the population that feels hurt much more badly.
And also, I do think this economy has remained so strong and defied all the expectations for why it should be weaker. And I think this wealth effect is one reason, and that's another reason, Becky, why if we do see a big downturn later this year with stock markets, that could also impact the consumer economy.
Am I less observant or are those new glasses?
Those are new glasses.
Wow.
Very observant.
Good call.
I feel like I've seen those glasses. Not on the air, but I have.
Not on the air. Yeah.
But I've seen them.
On him?
Yes. In other contexts.
What are you guys hanging out? It
was a work function. It was a work function.
Saying, I feel like I've seen them before. They're not.
Were you there? No. A work function, like a.
We'll make sure you get an invitation next time.
Was it in the mail?
You can turn it down.
The invitation was probably not in the mail, but I don't know.
Cheese will be next.
Coming up, Washington, D.C.'s Mayor Muriel Bowser on her surprising sports win after it looked like the city's basketball and hockey teams were decamping to a new facility in the suburbs. The capital city and the team ownership have reached a new deal.
We very much want Monumental Sports to be a part of the downtown comeback.
The mayor is bullish on Washington's safety and livability.
Sometimes it takes time for people in the press and the community to really hear and feel that progress, but I see it every day.
Squawk Pod will be right back. This is Squawk Pod from CNBC. Today with Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Here's Andrew.
There was a big weekend at the box office. I don't know if anybody here went to the theaters. Godzilla x Kong, The New Empire, logging the second biggest domestic weekend for a movie this year. That's behind Dune Part 2. Monster Adventure bringing in an estimated $80 million. Expectations of $50 to $55 million on that film. The movie from Legendary Pictures and Warner Brothers is the fifth installment in the Monster franchise.
The Washington Wizards and Capitals will now stay in Washington, D.C. until at least the year 2050. That's thanks to a $515 million deal between D.C. Mayor Muriel Bowser and the owner of those teams, Ted Leonsis. Mayor Bowser joins us this morning with the details. And Mayor, we have to say, first of all, wow, this is quite an upset you pulled off, because we had Virginia Governor Glenn Youngkin on the program in December announcing that he was stealing those teams and that they were going to be relocating. So what happened? How did this all come together?
Well, we all had the feeling of not so fast. These are our teams, and we believe that D.C. teams should play in D.C. And we put a very strong offer on the table back in December. And since that day, we've been working to make it even stronger, to build a great infrastructure around it, and to put that back in front of the team.
I was reading a story from the Washington Post about this, and it sounded from Ted Leonsis' point of view like you were mad when this first happened, but then you ran into him accidentally in a hotel when he was there for a conference and you were there for a separate meeting. Was that really an accident?
It really was. You know, downtown Washington has some great places, the Waldorf Astoria being one of them. I take meetings there frequently, coffee meetings, and he was there. I saw him. I excused myself from my meeting and said, look, I'm sorry, but this is a conversation that needs to happen today.
I mean, that's really incredible how you were able to put your frustration aside and build a productive working relationship. What did you do differently? And I think part of what happened here is Governor Youngkin and the Virginia legislature didn't see eye to eye. They couldn't get the package passed. You clearly went into overdrive and managed to put together a lot of things. What did you know you needed to do as a city to keep these teams where they are?
Well, one thing that we recognized was there was a lot of risk in the deal, that the details were very scant when it was announced in Virginia. And we soon just learned that it sounded too good to be true, and it probably was too good to be true. What we had was a real deal. We had the ability for the teams to renovate and place here at an iconic location where they've been incredibly successful. One thing that we know is over the last 3 years, post-COVID years, they've made more money here, have had more ticket sales here than they've had in their history. So what was missing is how this building could be modernized, speak better to the downtown, and grow. We had to sell them on a growing right here in place, an urban campus, and we've done exactly that. And more than that, we listened to the type of infrastructure they wanted to see around the building. And that's something that we've been working on, how to reimagine our downtown. We issued, I think, 2 really important plans, a DC Downtown Action Plan, a Gallery Place Task Force is at work, and also we're going to just change the public space. And all of that makes for a very interesting project. So if you want a project for your lifetime, like Ted has mentioned, this is it.
Muriel Bowser, there's few cities in the country that, you know, when you're young, if you get a chance to live in D.C., it's like, I'm going to do it. And it's such a vibrant, amazing place, and the seat of power, everything else. Thank you. There's going to be a but coming because my daughter's there, and I'm a nervous person already. So she's in her 20s. I already worry. She worries. She's scared. She doesn't feel safe. She had a place broken into, and someone got shot on her block. And she wanted me to just ask you, what's the answer? Do you have a plan? Is it broken windows that you got to do more of that, or is it more funding for police? What's the plan? Should she feel safe in D.C., Mayor Bowser?
Absolutely, and this is what you should know. I just got an update from my deputy mayor, and crime is down in all categories in Washington, D.C., especially those categories that so troubled us last year with robbery and carjacking, down more than 30%. So we've done the things that we know will reset our public safety ecosystem, starting last summer with an emergency crime bill, and most recently in just a couple of months ago with a new crime bill that really will reset our public safety ecosystem. So we feel very good that we're moving in the right direction, not just with crime, but with attendance up in our schools, with our population growing, with new restaurants opening, more per capita than any place in the United States. In fact, right in this very building this month, they will welcome 400,000 visitors, even with a sold-out show tonight. So people like your daughter are voting with their feet to live in the most exciting and important city in the world.
Is it we had recently, our mayor in this town talking about recidivism and trying to deal with that with the recent tragedy that we had. I know you probably saw all the policemen and 10,000 people lining the streets of Long Island.
For sure.
And there's just a notion maybe sometimes some crimes aren't classified like they used to be, so it looks like they're down. But I guess the point was if criminals aren't afraid of what's going to happen to them for minor crimes that you know, and there's going to be a no bail release or they're not going to do any time, that they don't respect the police and they're not afraid. They're not, you know, they do whatever they want basically and becomes lawless. There's nothing to that.
Well, this is what I can tell you and what I have engaged my legislature with over the last year. And that's making sure what I call resetting our public safety ecosystem, that it is based in accountability and it's based in giving people opportunities to go on the straight and stay on the straight and narrow. And that's what we see. And that's why we see, I think, the very dramatic increase that we're experiencing this year. Sometimes it takes time for people in the press and the community to really hear and feel that progress. But I see it every day in the energy around the city and the very brave men and women that protect our streets each and every day. So anyone who's interested in working for a very progressive law enforcement agency, great benefits, and live in the best city in the world, MPD is hiring in Washington, D.C.
Mayor Bowser, the Virginia legislature couldn't get this through, and some of the complaints were that this was too much of a giveaway that they were offering. Your package is a pretty big package as well, $515 million. Is it worth it?
It's absolutely worth it. We see Monumental as a very important company and employer in D.C. Over 1,000 people work here. They earn a good union wage. And it is very important to the businesses and restaurants that surround it in downtown Washington. So we very much want Monumental Sports to be a part of the downtown comeback. And we've had that discussion with our legislature back in December. A unanimous resolution was supported by all the members of the D.C. Council. And I actually expect them to vote tomorrow by emergency to authorize the $515 million partnership with Monumental.
You said you knew it wasn't a done deal with Virginia, the announcement of them leaving, because Ted hadn't signed any paperwork yet. Has he signed the paperwork with you?
He has. We were right here on this court behind me where we signed the terms that would lead to our final agreement. So our process, we expect to be a shorter one. The council will vote tomorrow. They'll vote on my budget, and then we will produce our development agreement. And right after that, we can issue the bonds that will help them start a 3-year renovation here.
Mayor Bowser, I want to thank you for being with us today. Pretty interesting story.
Thank you.
Next on Squawk Pod, fast food workers in California getting a big raise overnight as the minimum wage for workers in the sector there goes to $20 an hour. We'll hear from the owner of 18 McDonald's in the Golden State.
I want to underscore the words family owned because franchisees are not large global corporations.
You're listening to Squawk Pod. Here's Becky Quick.
Up and Becky, Q.
Wages for fast food workers are set to hit $20 an hour in California today after a deal was struck last fall between the unions and the fast food industry. Kate Rogers joins us right now with more on what this means for workers, businesses, and consumers in that state. Good morning, Kate.
Hi, Becky. Good morning. The minimum will be among the highest in the nation and the sector's highest as of today, with ripple effects sure to be felt for all parties involved in varying ways. Right now, Glassdoor data show that just over 20% of California fast food workers are making $20 an hour, so many more will wind up getting a pay raise. There are 500,000 workers in the sector in California. I sat down exclusively with Mary Kay Henry, SEIU president, who said this model of organizing by sector instead of by business will be replicated in the future, mentioning New York, Washington, and Illinois as potential future targets.
It's a combination of workers' willingness to strike and to lobby legislators and to defend the governor in the recall campaign, as the fast food workers did here in California. When those conditions are created in other states, we'll be able to make this same progress.
The hike may also lift wages for low-wage workers who are outside of the restaurant sector. Business owners like Jennifer B. Perez, who runs Growing Roots, a plant design and maintenance company in Long Beach, are closely monitoring the increase in order to remain competitive.
It's a ripple effect because I'm not part of that industry, but of course I'm actually looking at all of that as well. Because like I said, haven't worried about it too much because I was like, oh, I'm always over minimum wage. But since that keeps increasing and like that's a 25% increase from 16 to 20.
Her lowest paid worker is at $19 an hour, and she has to be wary of further price increases for her customers, she says too. Becky, back over to you.
I mean, Kate, that's really the issue here. I've been calling them unintended consequences. Perhaps in the case of the unions, these are intended consequences, but it really creates all kinds of unknown potential changes and how that ripples through not just related industries, but completely unrelated industries. How do you find workers in any of those other industries? Earlier this morning, we were talking about whether that be home health care aides, therapists, whether that be aides in schools, and a lot of those people who are caring for the elderly. I mean, those are some of our most vulnerable populations, and these wages are now going to far outstrip those wages. What happens in the meantime? It's going to be pretty chaotic.
It really will be, Becky, and I went to Seattle and we did a big story on this several years ago because if you remember, they raised to $15 an hour, which was very high at the time, and different studies over the course of several years after had different findings, right? Some low-wage workers had their hours cut, but then it did wind up giving them a nice economic boost. And depending on how you surveyed people, you got different findings there. So it's going to be a very interesting study to see here in California. And as you heard the SEIU president, they are looking to do this in other states because this was called kind of a backdoor way of unionizing, doing it by sector, right? Not by individual business. So it's going to be a fascinating thing to follow.
What's different about this, too, though, is this is an overnight rate hike of 25% versus doing it stair step, as that's traditionally done when you start to raise minimum wages to allow things to settle in instead of having this overnight, like, kind of crazy change. Kate, thank you. This is a really interesting look into what this is all going to mean. In fact, right now, joining us with an on-the-ground take on the new fast food minimum wage in California is Scott Rodrick, a McDonald's franchisee in California. He owns and operates 18 restaurants in the northern part of the state. And Scott, why don't you just tell us what it's meant from your perspective?
Well, good morning, Becky. Thanks for having me. The day has now dawned upon us where countless operators in California face this $20 wage. It impacts 15,000 restaurants up and down the state of California. It's going to be the most serious challenge for entrepreneurs that do business on the franchising platform. The vast majority of these restaurants run by small business proprietors who do business on the franchising platform, and the vast majority being family owned and operated, just like my restaurants. You know, I want to underscore the words family owned because franchisees are not large global corporations. The restaurant brands that we franchise might be national in name, but franchisees are local business operators. It's an important fact that somehow seems to get lost in the legislation that was crafted. And as you stated earlier regarding, it is absolutely the intended consequences. And for many, what makes this legislation unprecedented, let alone extraordinary, is that it only benefits employees who work in franchise restaurants. Whether you own one single donut shop or 10 donut shops in California, if you're part of a franchise brand with 60 or more locations, the new wage mandate is going to apply to you. And as you just stated, this is an extraordinary wage jump, 25% overnight. It's a serious concern for two reasons. First, it targets only fast food restaurants. And second, the sheer scale of the impact is just breathtaking. Historically, as you said about step-laddered approach, you know, many cities have studied and put forth living wages with annual CPI bumps. Certainly the city that I opened my first McDonald's in, San Francisco, is one great example of that. They chose a fair living wage. They set an annual CPI cap, and it allows us to plan for that as small business owners. It's fair to the employees, and it's fair to people who create the jobs.
We've already heard that some pizza delivery stores, for instance, have laid off or gotten rid of 1,000 jobs or more ahead of this, that they're just not going to do that anymore. They'll use the Uber Lyft apps to go ahead and have deliveries done that way. Uber and Lyft don't have to abide by that because their employees are not employees, they're contractors. You look at these workarounds that kind of happen with this. What are you doing in preparation? Are you going to lay people off, or are you going to find other ways to make up and make good for that 25% increase in wages?
Well, obviously, my team is focusing on every possible action to survive and maybe even thrive in the tumult that's going to start today. Obviously, one of the most critical levers that I can use as a business owner is price, but I certainly can't charge $20 for a Happy Meal. So I have got to be aggressive in seeking labor efficiencies to drive the top line. I've got to accelerate the digital channels even more. I've got to promote more off-premise delivery. Families are going to have to make very hard choices around capital X expenditures. For example, can I postpone updating a restaurant dining room? Can I put off investing in a new rooftop HVAC? And even the bigger question, should I open a new restaurant in California against these extraordinary legislative headwinds? The topic of the day seems to focus on the obvious move to cut labor or reduce staff size. But frankly, at least in my organization, that's the last thing I want to do. People in my company, and it's been this way for 30 years, are my greatest single asset. So the last thing I want to do is impact the folks that run my golden arches. But as you pointed out, even leading up to today, Pizza Hut and Round Table Pizza have laid off 1,500 drivers up and down the state. In an area that I do business in, Redding, California, at the end of January, 18 Subway sandwich shops, family owned, closed overnight. This is just a harbinger of things that will come. And I am going to do everything I possibly can to not only protect and defend my equity, but to grow my business so that I have jobs to provide the community.
Scott, I want to thank you for your perspective today. Scott Rodrick, again, who owns 18 franchisees of McDonald's in California. We appreciate your time.
Thank you.
That's Squawk Pod for today. First day of the week, the month, the second quarter of the year, April. Here we come. Squawk Box is hosted by Joe Kernen, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern to get the smartest takes and analysis from our TV show right into your ears. Please follow Squawk Pod wherever you get your podcasts. We'll meet you back here tomorrow.
We are clear. Thanks, guys.